In this market update, I'm going to be talking about why commodities, after 2 decades of underperformance, might be something you would want to add to your portfolio. Hi, Jim Gore from THOR Wealth Management. Today I want to talk to you about what's going on in the commodity market and why it might be something to consider for future investments. First of all, let's look at what has happened since really COVID began. This goes back to January of 2020, and we're looking at the energy sector as well as copper. This is what is going to be used for industrial purposes. And you can see that natural gas had a huge run up when Russia invaded Ukraine, but it has come back very meaningful since then. But since January of 2020, you can see here that copper's still up 44%. You have crude is up 27% and natural gas is up 7%. So there has been some meaningful moves in the energy market since that time period. But this you have to be very careful of because this is just a snapshot since 2020. Let's look back, going back to 2010. And this is important because this is when fracking really began. And you can see here that even though these energy prices and copper prices are up over the last 4 years, over the last 14 years, they are actually all negative. Copper being down 9%. You have oil is down 22% and natural gas is down 41%. So we've had an incredible time period of disinflation, and that really shows up in commodities. So you look at this commodity index since 2000, you can see that commodities had a heck of a run to 2007, up 180%. But since about 2012, we've had deflation. That's when fracking began. Fracking was very meaningful for bringing down all commodity prices because oil and natural gas prices went down meaningfully, which is what I just described to you earlier in the last chart. And because of that, we had a disinflationary time period, which made it very easy for the Federal Reserve to keep interest rates at 0% because commodities were going down in price and they were able to keep inflation low. However, you can see since COVID, the commodity index has gone up, and the question is, will that continue? For the last 2 years, it's actually remained stable here. So what does that mean for the future? And I'll get into that a little bit later. But let's look at some of the other soft commodities and things that mean more to you as a consumer. And so this is looking at corn, wheat, and cocoa, which is what you use for chocolate. And you can see that chocolate prices really have gone up here over the last really year and a half or 6 months, and that's because of production. So chocolate prices are going up. They're up 379% for cocoa prices over the last 4 years. Really all of it in the last year or so. However, look at what has happened to wheat and corn. Wheat, since before COVID started, is actually down 12.6%, and corn is only up 17%. There's still, so there hasn't been that much move over the last 5 years when you just look at that ending value. But go back to 2022, when we had a spike in inflation, both corn and wheat were up well over 100% in a very short time period. And so they fluctuated very meaningfully as we started seeing inflation coming back. But since then, you can see that prices have gone down, which is why you're going to see some of the prices at the grocery stores not rise as much because wheat and corn prices have gone down. Well, that's from the agricultural side. What about from the protein side? Basically, how much are we paying for our meat and the eggs? And you can see here that the biggest movement over the last 5 years has been egg prices, which is the cheapest protein that you can buy. So if you're worried about your budget, you're going to be buying more eggs than you will be buying beef and chicken and so forth. But that is up, it's up 130% since before COVID, since beginning of 2020. But they've come down meaningful. They were up 370% for 3 years ending 2023. So egg prices have come down. But what's interesting is beef prices are starting to move up. Here now they're up 11%, but they were actually down to 2023. And lean hogs, basically your pigs, are down 27% since COVID began. So you're not seeing the price being reflected in the protein, except on the egg side, and you are starting to see you are paying more for beef. So what happened is people buy more, beef prices that have gone up. What they'll do is they'll go ahead and buy chicken or buy hogs because they're cheaper than buying beef. And what will happen is demand will go down. And when demand goes down, and we know supply is going up because we know some of our farming clients and friends have switched over to raising more beef because prices are up. So one of the things that you've really got to look at here for commodities, they are starting to go up since COVID. They have tempered down a little bit, but the big thing for fracking is over. And most of the tier one level of getting natural gas out has pretty been dissipated, which is the easiest. Now we're going to be going to tier two. So there's going to be some pressures that are going to remain on the natural gas and oil prices going forward. But one of the biggest things for prices to go up is you need more money to go into that space. And looking at this chart, this is looking at flows of money going into ETFs and mutual funds on the commodity side. And you can see here, there's really not money going into this space. Actually, over the last 2 years, people have been pulling money out of this space. And as Wayne Gretzky said, you want to go to where the hockey puck is going to be, not where it's at right now. We think that commodity prices, especially with our deficit, will continue to go up. We had a 14-year really disinflation that really benefited the Federal Reserve. It's going to be a lot harder because we think inflation is going to hit all commodities going forward for the next several years. If you have any questions or concerns or need help with your portfolio, reach out to us at thorwealthmanagement.com or give us a call. Take care and talk to you in a couple weeks.